Legends, welcome to the Daily Buy Show, where we dig all charts as they relate to crypto. We jump into crypto, we look at Bitcoin, key levels, structure. It is the 24th of November where I am, maybe the 23rd where you are. So Bitcoin is bouncing. We're seeing a little bounce happening right now. However, is this just end of month volatility, or is this a real bounce? That's what we're going to be looking at. There's a few things we have to go through. Really looking at getting prepared for next week. It's Sunday where I am. I think it's probably still Saturday night in most other places around the world. So let's dig into it. Now, I'm just going to start here on the economic calendar. We're pretty light on this week. There's not much going on. We've got PPI at the start of this week. Aside from that, the main events coming up are, if we flick over to the December, first week of December, we've got payroll, and then we've got FOMC, second week of December. Okay, those are going to be the key events over the next 3 week period, 2 to 3 week period, because we've got a lot of volatility drivers stacking up, right? We've got potential liquidity catalysts, such as the QT potentially ending, rate cut, a potential rate cut. Now, the rate cut trajectory has been very volatile, right? Over the last few days, it's gone from, over the past month, it's gone from 90% to 44%, now back up to 70%. So it's been a really volatile trajectory. So what I'm expecting is, as we move closer to the rate cut itself, we'll get the payroll data, the NFP we'll get next week, not next week for whoever's watching over other parts of the world, but the following week. First week of December, we'll get NFP, and that will likely change this rate cut trajectory again. If it's weak data, then the December cut's going to be all but certain. If NFP comes in really strong, meaning strong labor market, I'd say that this may drop, and hence we're going to see that volatility flowing through to markets, because basically what's happening over now till the next rate cut is, one, we've got end of month volatility. So the first thing we got to be cautious of is if this bounce in Bitcoin could just be shorts taking profit, right? Because you got to remember, when shorts close, they got to buy their positions. So is this bounce just shorts taking profits into the end of the month? Okay, we don't want to get trapped there. And at the same time, considering we've got the major liquidity catalysts for the remainder of this year lining up, we're going to be seeing that volatility as the market anticipates what's going to happen and tries to position around it. So if we just quickly summarize the liquidity catalysts, right? We've got QT potentially ending. We've got that speculated for December. We've got the TGA. I'm going to load that up here just while I'm talking about it. The TGA has been refilling since July. So this is essentially the government's wallet. So they've been, every time they refill their wallet, it drains liquidity from markets. So they've been refilling since July this year. And you notice every time we come to this roundabout this $1 trillion level, that seems to be the level that they refill their wallet to. And that's where they start spending again. Now, we're approaching that level, and we're already seeing a pause that's been coming through. So is this the level that they've been targeting And does this now head back down? Okay, that would be a liquidity catalyst. At the same time, if QT is ending, that means the Fed's balance sheet here will stop declining, and at best, we see it tick up, right, like this. But what we really want to see is it at least just flatten out, okay, and that would improve liquidity. Right now, all of this will flow into our net liquidity indicator, and last week we saw the first uptick, okay, in net liquidity. We've been tracking this. It's been on a downtrend since end of July. And if we look at net liquidity just straight over Bitcoin, you'll see why net liquidity is so important to track. Because liquidity drives the market. Sorry, it's an indicator that I built because it aggregates the Fed's balance sheet. Right, I'll just put it here so we can easily see what's going on here. Right, you see how they move hand in hand? Now the liquidity ticks up. Even just if you look on these lower time frames, as it ticks up, you see those bounces kind of coming in. See here, as it ticks up here, we had this period here. But basically, we're looking for these major moves in net liquidity, this sustained liquidity like this, because that's the scenario where you can suggest there's external liquidity coming into the markets to drive some type of parabola or bullish price action if you're in the side of, if you're still in the bull camp, right? Because the structure's bearish. We've talked about that, and we'll dig into that a bit further. So anyway, we're watching net liquidities on watch this week, over the next 3 weeks, I should say, because of those key liquidity catalysts. And I believe the next 3 weeks, as we lead into the next rate cut decision, is ultimately going to be a big deciding factor on the next call it 4 to 8 weeks, the following 4 to 8 weeks. A lot's lining up for a potential counter trend rally, and we'll probably know within the next two to 3 weeks whether we're going to get that counter trend rally and the scale of it. Because if these liquidity catalysts do flow through and we start seeing the things we need to see, along with Bitcoin structure, obviously it all comes back to Bitcoin's price action, really. If Bitcoin doesn't respond to it, then we side with Bitcoin. However, if we see the structure developing in Bitcoin with the external liquidity bid flowing through, then that's going to be our recipe to be trading this counter trend rally. Now, the main thing I want to point out is, let's jump into stablecoin dominance, right? This is our most important chart for crypto right now. I've been calling this out on X and in the previous streams. If you're not watching this chart right now, you really need to be, because this is telling us what's happening with liquidity internally in crypto right now. And we're at a very key level where historically, when we breach this range high, confirmed with weekly bands bullish, okay? You can see it here in 2021. When we breached the range high, confirmed with bullish weekly bands and bullish weekly structure, we were heading into that deep bear market. Okay, this wasn't just a correction. This wasn't just a pullback. Bitcoin was transitioning to that deep bear market, and through here is where it went from 40K. After this counter trend rally, it went from 40K down to 15K. All right, now there are many people calling bottoms or still in the bullish camp. And if you're in the bullish camp, you need to be, especially if you're in the bullish camp, I should say, you need to be watching this chart, because you cannot be bullish if this keeps trending up. Where's the liquidity coming from? This is telling you that participants are moving into stable coins. They're not moving into crypto tokens. Okay, hence this is on watch. Now, why this is really critical to be watching right now as well is because of this highlighted counter trend rally, where last cycle when we were transitioning into the bear market in 2022, from Jan to March, we had this counter trend rally. And you can see here, the key signatures of it were, it was around this range high, okay? It was, weekly structure was already bullish, okay? And it was around this range high here. Now, when it had its rally, the key thing to note here, the bands never were reversed and never flipped bearish. Okay, so that's what we're watching for now. Whether it's here and we start doing it here, or whether we move a little bit higher and then we have this sort of price action, this would be a counter trend rally unless we start getting, so at that stage the bands will look like this, unless we start getting below the bands, okay, and then we start building weekly structure to turn back over. Unless we see those signals, this will just be a normal counter trend rally in a bearish macro structure, okay, right? So that's what we need to be on watch for with stablecoin dominance. Hence, this is the most important chart to be watching in crypto right now. Let's do a quick round the grounds on markets that have opened, because futures should have opened now. Yeah. Do a quick round the grounds before we jump into Bitcoin. Okay, so what's really on watch this week? The DXY is still following that cycle ending historical pattern that we've seen in the last two cycles. Just go through my X or go through my previous streams where I break down the cycle ending pattern. I'm not going to do it again right now. So what are we looking for in the DXY? If the cycle ending pattern continues, DXY is going to keep moving up like this in a macro bull trend after it's based. However, we're seeing it stall at the highs here. If we want the cycle ending pattern to fail and to be invalidated, we need to see DXY create bearish structure, daily structure. So we need to see us below here as a start, and then we need to see that trend back to the bearish side. Until then, we lean on the side of current structure and we continue to observe. Okay, and it's in a bullish trend right now. So we want to see, does it stall here? And the other thing on watch is, even if it stalls here and it comes down, this would support a bid in risk markets, i.e. would still support that counter trend rally. But unless we see a sustained downtrend, it's really not going to be anything more than that counter trend rally. It's just like any other market, the DXY will do this. It's not just going to go straight up and then up and up, or it might, but it'll have its moments. It'll cycle. And considering that we may have a rate cut in December, that should bring in some weakness in the DXY, right? But we'd need continued aggressive rate cuts for it to keep pushing down like this. If the rate cut goes away, expect this to go up with more momentum. If the rate cut persists and the market gauges any more sentiment that more rate cuts are coming aggressively, then it's likely DXY will turn over. All right. Quick look at the indices and how they've opened, because all key indices are on watch right now. As we called out yesterday in the stream, the daily structure is being tested. So what we're looking for here is whether see the fact that it's had some closes below the daily, that's not a good sign for structure. If it was just to sweep and quickly reclaim and recover, that gives you more confidence in the move to continue bullish. However, because we're having consecutive closes down here and we're struggling to reclaim so far, and the bands have crossed red, the daily bands, that's adding more pressure to the downside, okay? So what we need to be aware of is if the DJI, and now the SPX and the NQ and the RTY are following a similar structure at the moment, so we'll flick through them, but I'll just paint it out on the DJI. If the DJI continues like this, expect the bear market for Bitcoin to continue as well and go much deeper. Okay, so this is what's on watch for all 4 key indices right now. Oops. This is what's on watch for all key indices to see whether daily structure is turning over bearish or if this is going to resolve to the upside. You'll see here the SPX, same. However, slightly more bullish because it's only swept the daily. So that gives me more confidence and more probability that this could continue higher. Still watching these bands that have crossed, and we'll watch price develop. NQ should be similar to the SPX. Yep. So hence this week, this is on watch, right? We want to see this reverse, especially the RTY, because the RTY is more closely related to Bitcoin in the way that it moves, because the RTY is that index of 2,000 small caps, right? So it signifies the broad appetite of risk, for risk, I should say. So it means big players or big capital has more appetite for risk when the RTY is bullish. Hence that translates to Bitcoin, because Bitcoin still functions as a market that's well out the risk curve. Okay, so you see here the correlation in how they move. Okay, so the RTY is on watch, considering that it's starting to break daily structure as well. If it continues down like this, yeah, these are all confirmation signals that we're heading into a bigger, broader bear market. Okay, and again, the reason why we track all these macro markets is to understand the macro context and the potential scale of the moves that are going to occur. Now, if I'm just trading Bitcoin on the low time frames, if I'm day trading, intraday trading, I'm not really looking at these markets much because it doesn't matter to me because I'm just trading Bitcoin. But again, with my focus being for this channel on more of the macro market moves and more leaning towards high time frame swing, positional, and investing in crypto and Bitcoin, we need to understand the macro context. Okay, we need to understand what's happening in the macro landscape so we can be positioned with the tide moving in the right direction. And we can understand the scale of moves that may be coming. See, if for example, all of these macro markets weren't showing any bullish signs whatsoever, but Bitcoin was bearish, that would lean me more towards Bitcoin just having a correction, an internal crypto correction or pullback. But the fact that all of these macro markets are also showing us some bullish signals and following some historical cycle ending patterns, that adds a whole nother layer of caution to my positioning and approach to crypto, because these are the biggest signals aligning for a bigger macro trend shift. Now, futures opening slightly green. It's still early on the day on the open. The key signals will come with how Wall Street opens tonight. So let's jump straight into Bitcoin next. Now, we've already got our key levels. Let me just pull this up here. We'll do a quick refresher on our key levels. Okay, we'll start out here at the quarterly. Now, I've got the yearly open marked. Reclaiming that yearly open would be a start in terms of turning around or the bulls gaining some type of momentum. You can see we've got this cluster of levels building here around the Q3 lows, around the October lows, where is also the current daily structure high. Now, that's going to be a big key area, and we're so far away from it right now. Even just looking at where we are in the quarter, it is almost December. We've got 1 month left in the quarter. For the bulls to reclaim Q3 lows, it's got a lot of work to do, right? It's not that it's not possible. We've seen crazy things happen in crypto. Anything's possible in crypto. However, there is a lot of work to do. So if this quarter is to close as a sweep of Q3 lows, we need to get back above that 105K level. To me, it still doesn't fully convert the price action to being bullish again. We'll need to analyze daily and weekly structure in how it reclaims this level. But if you just look at the quarterly, it will leave us with an outside bar. Okay, and usually outside bars coming into a major peak aren't a great signal to be bullish about. They often mark turning points. So we'll still have that left to deal with, but it's a lot better place to be ending the quarter than where we are right now if you're a bull, okay? So I've got the Q3 lows marked out, the October lows marked out because we're still in November, but at this stage, unless we get some major move, I don't see October lows being recovered. Looks like we're going to close below October lows, and the daily high is still there. All right, the monthly doesn't look much prettier. This is a strong push down, okay? Now, if we head out to the weekly, these are my primary time frames for structure for the macro cycle, because if you're trying to trade structure on the monthly and the quarterly, you're gonna, unless maybe if you're trading a 10-year time horizon, but if you're trying to trade the macro cycle, you're not going to do anything actionable on the monthly or the quarterly. Okay, aside from just looking at your sweep signals, your monthly highs and lows, tracking actual structure for Bitcoin, you need to be looking at the daily and the weekly if you're trading the macro cycle. Okay, and then you need to be using, obviously tracking market structure, but I use my TT bands, which are just 1221 EMAs, and I just ran a simple script that colors them blue or green, green or red to indicate whether they're bullish or bearish. You can build it yourself, very easy with ChatGPT, or you can DM me on X and I'll give you these for free. On the weekly is where I've back tested them significantly with quite a few different signals. However, as a general tool to use, when they're green on the weekly, we're in a bull market. When they're red, we're in a bear market. Now, with any bands, moving averages, most indicators as well, they're lagging, right? So price action's always going to give you the cleanest signal. For me personally, they're not a standalone signal system. I use them in confluence with other things I need to see, but they're a very good macro trend direction tool. Okay, now I just pointed out when the bands are green, we're bullish. We're in a macro on the weekly. We're in the macro bull trend, as you can see historically as well. The bands are crossing red. Okay. Now, if you look at what happens when the bands cross red, it happens when Bitcoin starts trading below the bands, but importantly, we start finding resistance into the bands. Hence, we've got to be tracking now, once we're below the bands, how that interaction occurs when price comes to meet the bands, because chances are, especially on these major taps, first, second, third, fourth, right? So in the last bear market, we had these 4 taps. The bands are going to provide resistance. Okay, so considering it's quite early, the bands are confirmed bearish now, and look at all this headroom. So it's likely, again, supporting a counter trend rally where we can still rally right up with the bands turning like this and potentially find resistance into the bands. Now, for me personally, that's an area, if we do start rallying and getting into the bands, that's an area that I'm going to be looking for a macro short setup. However, just looking at the weekly time frames, starting with structure, our current weekly high is up at the all-time high. So unless we flip that level, the weekly remains bearish. Now, how can the weekly turn bullish without flipping that level? Well, it needs to come up, create a new high, turn over, create a new low. Then our new weekly high will be here. Then if we get above that weekly high, we will turn bullish. Okay, so that's why right now I would actually prefer if Bitcoin starts to build some structure down here and create a base, even if it comes down and takes this low, creating new highs here, and then we build structure and then we come back up. Okay, this is the kind of thing that would start to get me more macro bullish on Bitcoin again, along with watching other key signals. Like I'll be watching how we interact with the bands, how order flow looks, how importantly the external liquidity bid looks, okay, if the liquidity picture is improving. On the daily, our last daily structure high is up here back at 107.5. We haven't put in any daily structure since then. So it has me thinking about a couple of different things, right? First and foremost is Bitcoin can just charge straight up like this and still be bearish, okay? Because the structure's here until it flips this level, right? So if we were to do this, I'd be cautious. Like maybe we're getting a massive V bottom, but again, if it's not supported by external liquidity, then I'd be looking for major short setups coming into these key areas here. What I'm more sensitive to is because we haven't built any structure here, I think we could see some chop, right? And ultimately this chop would be good because this chop would be chop, consolidation, sideways price action, ranging, whatever you want to call it. Ultimately this will be good because this is building structure and potentially building a base if you want to be in the camp of bulls to be able to start heading higher, right? So I'm going to be sensitive of that. I'm not jumping in too early, considering especially when I say jumping in too early, I do want to get involved with the counter trend rally, right? If we look back to 2021, the major counter trend rally came in January to March. So that was around about 3 months, 42% in Bitcoin, which means many altcoins did 1, 2, 3x's during that counter trend rally. Okay, so whilst my bias is bearish and I'm macro bearish and net short, I have systems and strategies that allows me to participate in these counter trend rallies, which I will be, right, to trade that as well. So hence, I'm watching daily structure at the moment, and I would like to see something like this where we come up, maybe we find resistance into the yearly open upon first approach, we come back and sweep these lows, okay? Then I'd be interested in some type of trigger here to maybe take some trades, but also that to me would be a stronger signal on looking at those counter trend trades to trade into this area. Because I'm not sure, just looking at the daily structure and the fact that we haven't built any structure through here, from here to here, I'm not sure this just charges straight up like this, okay? So here, potentially fakes people out into month ending, right? We've got month ending volatility, we've got rate cut early to mid next month, second week of December. We've got employment data coming in, the NFP data coming in first week of last week. So, you know, maybe we get something like this, come back down. That's where I'll be looking for signals on potentially trading some alts into this counter trend and assessing structure as it develops. As it stands, however, the key things to note is this is our high, our last primary structure high on the daily trend. So that's the key level to note, where we're still bearish until that trend's taken. Okay, a couple of other things. Obviously, the most obvious next downside target is this monthly low down here, and we don't really have much through here, right? What's left? This little pocket of demand that we've taken. So if this run of this liquidity isn't resulting in anything, then the only thing left is down here, right? Which makes sense from a continuation perspective on the macro trend. Right, so that's what we need to be watching. Cruise back out to the weekly. Now, considering we've closed, we've now confirmed our first sell side weekly gap. I've got a I read order flow through fair value gaps, and I explain how I do that in one of my videos in the building block series. So if you just go on my channel and look for reading order flow through fair value gaps, I look at the most recent fair value gap, okay? And then I want to look at when it's inverted, and I use this as a proxy on order flow, where I can see who's in control of the market. Now, it's pretty obvious right now in this move, okay, that sellers are in control. But the fact that we've gapped down here, that also shows significant order flow momentum. Okay, so this is likely to be resistance, where sellers step back in. Okay, so that's what I've got noted on my screen. And if you see here, on my chart, I should say, if you see here, I've got the most recent daily as well. So on the shorter term, what you find is when these get inverted, you'll see if they hold as support and whether new gaps come through on the move up, because that would suggest, at least for this last push in price, we've had short-term order flow flip by way of these sellers being inverted, as well as if there's a buy side gap created, there is some short-term buyers stepping in. So what you'll often find is price will tell us its intent by if it respects the inversion as well as the new order flow, okay, and that might tell us it might be heading up a little bit higher. But we read the tape as it kind of plays out. Legends, that's pretty much it for today's stream. I'll be back again tomorrow. We went through what we need to be aware of this week and over the next 3 weeks as we approach month end. Don't get trapped in a bounce over this week. Be careful, I should say, of the bounce trap of month end potentially just shorts closing. And please give us a like, subscribe, and give us a follow on X. Hope you have a good rest of the weekend wherever you are in the world, and I'll see you again tomorrow. Cheers.